So today we're going to get into Chapter 8 in our QuickBooks tutorial textbook. And in Chapter 8 we're going to focus on some other things that QuickBooks does that we haven't covered yet. So the title focuses on payroll at the beginning, but we're also going to kind of be a hodgepodge and get into some areas that just didn't fit in the last two chapters where we talked about vendor activities and customer activities. So on page 8.4, we're going to get into, like I said, the first thing is going to be payroll. So for payroll, we're going to come down here to our payroll center within QuickBooks. And it looks like I got some technical difficulties here on the left side of the screen, but that's okay. So we want to run our payroll that ends February 15th. And you can see here that's the only payroll that we have available. So once you get payroll set up and you start running it, by whatever your schedule is on how you pay employees, that's going to show up under Create Paychecks up here. So I'm going to double click on that Create Paychecks, and our pay period ends February 15th. Our check date is going to be February 15th. I'm going to set the first check is 5/17, and we got our 3 employees. And we're going to want to enter in their hours for regular pay and overtime. So we're going to come down here and we're just going to highlight and change them. And then you can see it totals up the hours. So once I have the hours entered in, this should match your picture there on 8.5. I'm going to hit continue. And now after I hit continue, look at this. Based on their pay rates and the hours, it just calculated everything for us. So we've got their gross pay, we've got their tax withholdings. That gets to our net pay. It's calculating what the employer's share of those taxes are. And if they had any donations or anything that they were taking out, that would show up under the contribution section if we were keeping that withheld for them as well. If I want to see the specifics for each employee, I'm going to click Open Paycheck Detail. And you can see this will open up the payroll for each individual employee. So you see we've got the amount that they're earning here, and then in the individual withholdings down here. So in the last window, it summarized the tax withholdings, but now you can see the individual amount. And just in case it didn't do the calculations correctly or what we wanted it to, we could highlight over and make a change, just making sure that the number was negative in front of it. So you can see there, this is essentially what the employee's pay stub's going to look like. It's got their gross and net amounts for the current time period, and then it totals up what they're doing year to date. So this mimics the employee earnings subsidiary ledger that we had in the practice set. And look at that. I mean, it was a whole lot quicker, wasn't it? Just went in 5 seconds, boom. There are all the numbers rather than having to multiply times 6.2% and 1.45% and having to go back and look up the amount of federal withholding and take that out. So of course, just like in every other instance, QuickBooks saving us time. So that's for Jennifer. And if I hit Save and Next, I can go look through each of my employees. You can see it's also keeping track of the company stuff down here as far as what our payroll taxes are going to be. Remember, we had to make an adjusting entry for payroll taxes. It's doing that for us by calculating our share of Social Security, Medicare, unemployment, etc. And so on and so forth for each of our employees. Each screen should match the pages all the way to 8.7 and 8.8. When I'm done looking them over, I'll hit Save and Close. And then when I'm ready, I'll hit Create Paychecks here in the bottom right corner. And then you can see if we were using checks that we ran through the printer, we could click the Print Paychecks so they would be printed out. If I wanted to print out the pay stubs to give to the employees in with their paycheck, as I'm supposed to do, we could do that there as well. So once we're done, hit close. And you can see now our payroll is adjusted for 2 weeks from now in the next payroll we're going to run. I'm going to hit the X up in the upper right corner here and close out of payroll. Next up on page 9, we're going to talk about making a journal entry. So I've tried to keep you guys sharp with journal entries by bringing that up from chapter to chapter, making sure we can analyze the transactions that we've done and what their actual effect is on our accounting ledger. And QuickBooks has all these different buttons in here. They make our life easier. It allows us to do the accounting transactions in a simpler way, but sometimes that just doesn't work. We have a transaction where there's not a simple, easy button. So in that case, we've got to make a good old-fashioned journal entry. So I'm going to come up here under Company on my File menu, and I'm going to scroll down about 3/4 of the way down here, and I'm going to click Make General Journal Entries. And that's going to open up a window where we can plug in our debit and credit. So I'm going to fill in the date here on 8/9. It's February 28th. And we're going to enter in the debit. Remember, debit on top, credit on bottom. So it looks like we need to make an adjusting entry to recognize some interest on a loan. So if you guys remember in the practice set, we also had to do this. Had to make that interest adjusting entry. So my debit is going to go to my expense account, interest expense. Then enter, when you're doing a journal entry, make sure you enter something in the memo so that somebody looking back at this later that's not you can understand, or even you then. If you're always going to be the accountant, you can look back and go, why did I do that on that day? What the heck was happening here? So in this case, we know we were recognizing interest on our long-term debt. Once I'm done, I'll hit Save and New and open up another entry. Page 11. Now we're going to get into the adjusting entry for bad debt. Once again, another thing that we had to do in the practice set that we were supposed to do. Some of us didn't. So we're making sure we're covering it now. So to make the adjustment for bad debt expense and our allowance for doubtful accounts, or in this case they call it allowance for uncollectible accounts, we're going to do a debit to bad debt expense for $381.66. And we're going to do a credit to, like I said, allowance for uncollectible accounts for the same amount. So we got to make sure with our journal entry, we always have a debit and a credit listed. You can't list half an entry. You must have a debit and a credit, and they must be different. So I'll hit Save and Close. When we're using accounts receivable, we got to plug in a name under the customer. So we're just going to use the customer allowance account for that. And there we go. Next up on page 13, we're going to talk about adjusting our inventory. So it's possible that if we're going to be a merchandising business, that for whatever reason, what we physically have and what we've recorded in QuickBooks isn't going to match. So whether a mistake accounting wise, whether it be something got damaged and was no longer sellable, whether it be whether it be theft, there are many reasons they might not balance up. But regardless, if we have an issue, we need to make the adjustment and make sure it's done correctly. So I'm going to come up here under Company in the upper right corner of my homepage under Inventory Activities. I'm going to come down to Adjust Quantity on Hand. So if we do that, we can essentially fix what our records are within QuickBooks. So once again, I want to set the date to the end of February. Your adjustment account is always going to be cost of goods sold because we paid for these items. So regardless of what happened to them, they're gone. We're going to expense them out using cost of goods sold since that's our expense account for inventory. So it looks like we've got some sheet sets and my numbers are probably going to be a little off slightly because I reset it, but maybe not. No, looks like mine are matching, but yours may be off depending upon some of the practice transactions that we've done throughout these last few chapters. So it says here that in QuickBooks I've got 190. I went and added everything up on hand and I only have 183. So under new quantity, I'm going to type in 183. And then for my blankets, I'm going to type in 212. And you can see the net adjustment is going to be recognized at the bottom, the negative 77. So essentially that's a debit to cost of goods sold and a credit to inventory for $77. I'll hit save and close and my adjustment is made. If I went and looked under items and services, you can see my items match the quantities that I just wanted them to. So if we want to go back to double check our work. And the last thing in Chapter 8 is a bank reconciliation. So once again, back in the practice set, we were required to do a bank reconciliation where essentially we want to compare our books to the bank's records and make sure everything matches. And we have to do some adjustments for things that, checks we know we've paid, deposits we know we brought to the bank, but they didn't necessarily end up in the bank records as of that bank statement date. And this is a good policy that for businesses, every business absolutely must do to make sure that everything got recorded in the accounting system and your records are up to date. But also you as individuals can do a bank reconciliation every month to make sure your records match what the bank did. And so you absolutely know what is in your account and how you're using your funds. But it's something we can talk about further on another day if I ever get to teach a personal finance course. So to do a bank reconciliation, we're going to come under banking here in the middle of the page over on the right side, and we're going to click reconcile. So we want to know the date of the bank statement, and it should update to the next one that hasn't been done, in this case, January 31st, 2017. We've got the beginning balance, which should match what QuickBooks is telling me. So that's essentially taking what the ending balance was last month at the end of December. And then we'll plug in what our new balance is at the end of January. That was given in our bank statement. And it looks like we had a service charge of $31.50, just like we did in the practice set. And we're going to use miscellaneous expense for that. So that would account for the general journal entry that we made during the bank reconciliation. We debited it to other operating expense as opposed to miscellaneous expense. And I don't care, as I probably mentioned in these other videos, for using miscellaneous expense. If something specifically happened, call it what it is. In this case, it's a service charge or a bank fee charge. Call it that. And use that in your general ledger. So once I've got that, hit continue. And now this is going to be the list of every check and every deposit that I have that hasn't been reconciled previously. So now here they've given us the list of outstanding checks. So these are the ones that haven't cleared the bank. So this is something you're going to have to pay attention to. So now everything else has cleared the bank except the items that they've listed, 506 and 59 through 512. So you're going to want to check off everything else but those items that are outstanding. So I'm going to check off 501, 502, 503, etc. And I'm going to leave 509 through 512 and then the other paychecks that we've just written, all those unchecked. So you got to be careful with that as well, because we just wrote 3 paychecks. Those happened in February. We're reconciling the checkbook as of the end of January. So those February transactions had not occurred yet. So don't check them off when going through a reconciliation. And then it looks like all our deposits from this time period were reconciled as well. So when I'm done checking everything off, what I want in the bottom right corner is a difference of 0. So you can see by listing off the checks that have cleared the bank. Now in the problem here and in the homework problem I'm going to give you, I'm going to list the items that have not cleared the bank. So you do not want to check them off. And we want to make sure we have a difference of 0. If you don't have a difference of 0, you're not done. Keep going. Either numbers are entered off wrong here, so that's one purpose of doing a reconciliation, because we make sure that we have the checks recorded for the right amount. We have the deposits recorded for the right amount that made it to the bank. But we also may have just made a mistake and checked off the wrong ones. So once we're done, hit reconcile now. QuickBooks is going to give you some reports. For your purposes, you don't need them. You could display them or print them out. If you wanted to check them out, you hit close. We move on back to our home page. If I hit reconcile again, you can see I'd go back in and now it would automatically go ahead to the next month. So it's going to fill in February, and my ending balance that I just had in January becomes my beginning balance for February, and I do the process again when I receive that bank statement. So that is everything in Chapter 8. If you have any questions, please let me know.